Good morning, good afternoon, good evening, wherever you are. Today on the show, we've got US inflation figures. They've come out. The founder of 3 Arrows Capital, well, he's complaining about the liquidation process. Celsius, they keep on paying down debt. And Voyager Digital, well, their token seems to be rallying through the roof. But as always, before we start, if you've not subscribed, please hit the subscribe button. And please hit the like button as well. To begin with, as always, we start with the markets. As you can see today, the markets are not doing too well. The market cap has gone down to 897 billion. Just imagine that. Only a week ago, we were at 1 trillion market cap. And now we're down to 897 billion. So that's a whole 100 billion that's been wiped out of the market cap. That is really bad. The Bitcoin dominance, that's gone down to 40%, and the Ethereum dominance, that's also gone down to 13.85%. As you can see there, the market's gone down. That's, a whole billion, 100 billion wiped off there. And in terms of the bull or bear, 7%, so it's a bear market. And as you can see, it's all red there. Nothing bullish about this market at the moment, very bearish. And we've been in a bear market actually since the end of last year. So we're looking about 7 coming up to 8 months of a bear market. So things have been extremely tough out there. Now, with regards to the sectors, well, the yield farming sector is actually up by 0.9%, with the top gainer being the Aave protocol. Exchange-based tokens, that's up by 0.35%. Derivatives, that's up by a whopping 2.13%. The metaverse, that's up by 0.28%. Gaming, 0.47%. And the NFT sector is up by 0.42%. So as you can see, though, a lot of things have been going down. Certain sectors have been doing well. What about the individual gainers? Well, as you can see here, we've got quite a few top daily returns here. The one that sticks out to me here is Quant at 4.48%. Even GMX at 4.56%. Oh my God, SafeMoon is back at 4.75%. Haven't seen that on there for a long time. And the daily returns, the worst on here is Voyager VGX at 16.47. But as we'll explain later, that's because they have had a fantastic couple of days. So that 16% is nothing compared to the fantastic couple of days that the Voyager token has had. And with regards to the price, we'll have a look here. As you can see, within the last hour or 20, everything's been down. A lot of reds. So it's pushed everything. The 7-day graph, 24-hour graph is down. It's all going to red. All going to red, as you can see, pushed down because of this 1 hour trending downward trend. Now, why has that happened? We'll explain that to you in a minute. First of all, let's look at the Bitcoin. Bitcoin price, that's $19,213 each. That is down 3.33% over the last 24 hours. TM grade of 29%, again in the sell sector. We want that to be on the strong buy, so we need that to get up to the 80% or 85%, so it could be really bullish. And as you can see, with regards to the actual trading activity, I drew this line here just to show you a resistance line. So that resistance line is around that just below 1900. So you're looking here around 1880 on there. Probably slightly more. You're probably looking 1900, I'd say, was the resistance, but it went slightly under there. We'll just be, we are below the resistance. It has not hit the resistance level. It's trading still above that resistance level within that little pocket there that it's been doing since the middle of June. As you can see, a little W there. Probably looking to do another W. We'll have a look and see. With regards to Ethereum, each Ethereum is now $1,021 each. That is down 4.76%. Again, with Ethereum, it's on the sell sector. TM grade of just 21%. Again, we want that to go up to 80, 85, get the bull market back up and running. And as you can see here, again, I've drawn this line here to show you the resistance level. And as you can see, it's around that $1,000 mark. It did go slightly below it to 997 previously, but it seems to have kept above that $1,000 mark there. And as you can see, it's also done that W there. It did that. Here you go, W, and then after that W, it's come down. So you've got the resistance up there that it hit, as you can see on there, on both times, and it's come down. And we'll see if it will again bounce off this resistance and go back up. So that is the resistance level at the moment. And let's have a look at the news. The big news out that's causing all the sells, causing everything to go into red, is the US inflation. US inflation figure has come up at 9.1%, and that's a massive jump. And because that figure has been, it's just basically smashed the expectations, that is why there has been a lot of sell-offs, as we saw earlier on here. Look at all those reds, because the figures came out, everybody looked at it, and they were not impressed with this inflation figure of 9.1% coming out of the US. As you can see, in the last 12 months through June, the CPI jumped 9.1%. CPI just is short for Consumer Price Index, which basically means inflation. Now, that was the biggest gain since November 1981. So they had to go down, look at the record books all the way to 1981 in order to see this kind of gain. And that's why you've got a lot of sell-offs going through. But there's been a lot of talk that a lot of oil has come down from its top, from what it was trading at its all-time high. A lot of commodities, wheat has come down from its all-time high. So they reckon that those drop in the price of these commodities and oil and everything is going to go through the system, and it's going to bring inflation down within the next few months. So they reckon inflation is going to come down within autumn. But in the meantime, there's a lot of talk that the Fed is going to up the interest rate by 0.75%, 0.75%, which is 75 basis points. So that's the talk. Everybody's scared about that 75 basis point uptick in interest rates in the US. So we'll wait and see what the Fed does. But everybody thinks they're going to do it. With figures like this for inflation, yeah, I reckon they'll probably do it, because they have already said that their number one thing to fight is inflation. They're going to fight inflation whatever happens. So they'll have no option but to put the interest rate up by their projected 75 basis point. Now, one of the founders of 3 Hours Capital, after being silent for approximately a month, really, he's now come out and sent out this tweet, which I've retweeted. He's basically saying that he was trying to cooperate with the liquidators of 3 Hours Capital, the fund. He was trying to cooperate in good faith, but he's saying that the liquidators are not working in good faith. So he's sent out this couple of emails here, and he's talking about the WRT, which is the Starkware token warrants. He's just basically saying that he's asked them if they've exercised the option in order to take these warrants and so forth, but he's getting nowhere with them. And so because of that, he's not going to be turning up or helping with the liquidators with their process. So we'll wait and see what they do, but that's a very ugly situation going on there, where you have liquidators and the founders obviously on completely two different paths there. We'll wait and see. Now, Celsius, another company that is in absolute troubles. But what they've been doing, they've been paying out a lot of debt. So remember, they had DAI loans here, and they paid it all off, and we showed you that. They ended up collecting their collateral back. Their collateral was approximately 450 to 500 million dollars. So you're looking at $500 million, which they managed to take back there. And now, as we let you guys know, which was yesterday, in fact, we tweeted this out yesterday, saying that they had 258 million in debt on their decentralized lending protocol Aave. and compound, and they have 950 million in collateral. Well, we had a look yesterday and they had paid some down, and if you look now, they've paid even more down. Their debt is down to 21 million today, and they've taken out a lot of collateral, so they've only got 200 million worth of collateral left. So from 950 million down to 200 million, so they have taken up 700 million really worth of collateral. So they have taken out a lot of money, and they seem to be paying down their debt, taking down their collateral. So they've only got 21 million left to pay down, and then take down this 200 million collateral, which I think they will do because they did the same thing with their DAI loan previously, as we showed you. So let's have a look at their token. So the Celsius token, it's up by 0.52%. It's trading at 0.73 cents each. The TM grade is 65, so it's saying it's a buy. And if you look at the chart, as you can see, it did really badly, but then it's kind of bottomed out there at around the 23 cents, I think it was. It bottomed down, and it's been going up, and now it's sort of doing that W-ish, but it's very, very bumpy at the moment. People are waiting for the news to see what happens. Is Celsius going to be able to come out and say they've resolved their liquidity issues and everything is fine? Or are they going to file for Chapter 11 bankruptcy? Nobody knows. They've been very quiet, very tight-lipped about what's going on. But due to the blockchain, and the great thing about blockchains is they're transparent, everybody can have a look. We have seen what they're doing with regards to their positions in the loans that they had, in terms of their collateral, what they've been doing, paying down their loans and collecting back their collateral. So we'll wait and see. We're really hoping that they will be able to make a statement so that we know what's going on with regards to that. As soon as I find out, I will definitely report that to you. Aave. Now, as we saw earlier on, they have been paying back their Aave loans, and they have had Aave here. So now that they've paid quite a lot of the Aave back, so they've now just got mostly DAI and so forth. But as you can see, the Aave token itself, it's up 3%, $69.5 each today. They had also that news, which we did report on, which they're going to be creating a new stablecoin on the Aave protocol. And stablecoins are worth 150 billion on within the crypto sector, and they are the fastest growing sector. If you just rip everything out and talk about sectors, stablecoins have been the fastest growing sector over the last 6 months or so, even over the last year, I think. They've been growing extremely fast. We did have a look at the stablecoins a while back. As you can see, number 3 and 4, Tether and USD coin, both of these are stable coins. And look at that, number 6, Binance USD, that's a stable coin. So as you can see, there's a lot of money in stable coin, because the Binance USD is 17 million. The USDC by Circle, 55 billion. 17 billion Binance, 55 billion USDC, which is Circle. Tether is 65 billion. So there's a lot of money in stable coins, and it's 0.99 on both of these. So yeah, that's fine for it to be just a cent off or a cent above. That's no problem. You want it as close to that $1 peg as possible. So that actually is a good price for that to be. So the TM grade at 72 coming to a good buy. Like I say, we like that to be at 80s, because 80 brings it up to that strong buy. 80, 85 strong buys, that's where we like to see them. But 72 is good, it's very good. And as you can see, it's been quite choppy again, this chart. Very choppy. It was up, down, but it's not gone underneath there. So you can see the resistance is around that $45 mark. So as long as it hasn't hit that, then you've got good resistance. Well, the last time it did resistance was like around 53, 54. But yeah, we'd have to have a look and see how it performs over the next couple of months. Now, according to Voyager Digital, who are in their Chapter 11 bankruptcy, as we previously told you. Alameda Research owed them 376 million. And as you can see there, Alameda Research, 376 million. This is their biggest problem. 3 Arrows Capital with 654 million. Turns out that these guys at Voyager Digital lent all that money out to 3 Arrows Capital without any collateral at all. And 3 Arrows Capital, the founders aren't even helping the liquidators. So it's going to be a very ugly battle going on there. But that's their big hole. The rest, Genesis Global Capital, they say they're fine, so they can pay back the 17 million. Galaxy Digital, they put out a statement, they're fine, they can pay the 34 million. The rest seem to be fine. That's their biggest problem, 654 million. Now, this Alameda Research, once we did find out in these filings that Voyager Digital did within the Chapter 11, when we found that out, Alameda Research then came across and said, well, they're going to pay back the money, the tokens. Well, what's happened then? It's the Voyager VGX, which is Voyager Digital's token. Look at this. It's gone up 455% in the last 24 hours. That's nearly 5x in the last 24 hours. You know, just you put in 100,000, that would be 500,000 really, nearly 5x. The price per token at the moment is 0.83 each. As you can see though, the TM grade is giving it still, to sell at 31.85%, which is a sell, because at the moment they are still in bankruptcy proceedings. So it's a very risky trade if you did this. Even if you put 10,000, 100,000, 5,000, whatever you put, it would be extremely risky. In terms of the volume, look at 497 million. So the trading volume is there at 497 million. You've got good volume, but it's an extremely risky situation. The market cap still at 242 million, so that's not too bad. Now, if you look at the chart, it's just funny, just look at that. So this was yesterday from 0.15. Look at that, it went all the way there to 0.39, and then it started here, on there 0.32, and look at where it is now. It's absolutely rocketing it up really quickly. The Voyager VGX. Now that could be because of the positive news that's been coming out, because they filed their Chapter 11. They've Alameda Research saying they're willing to discuss either paying them back the loan if they want that, but Voyager might not want the loan. They might want just to be paid back. They might want the interest. And if Alameda Research pays back the loan, they'll take back their collateral. We don't know how much collateral they provided, so maybe Voyager Digital wants to keep that collateral. So everything is positive on that end. It will be a deal done how Voyager wanted it to be done, which is good for the creditors. They've come up and laid a clear plan of exit, how they're going to exit the Chapter 11, how all their creditors should be basically compensated. They'll get a percentage of what they had in deposits, and then they'll get shares of the company and some tokens. So they've laid out a clear plan of working through this, and that could be why Voyager's token is rallying. Now, talking about tokens, token metrics. In both bull and bear markets, their Genius AI uncovers the best investments by scanning over 6,000 cryptocurrencies to provide the critical information needed to find high potential coins early. Notable customers at these firms use token metrics. That is Coinbase, Facebook, Amazon, HP, Chase, Accenture, Deloitte, Uber, and I'm sure there are many more. Now, the reason they use that is because token metrics provides everything necessary to analyze the crypto market. They provide AI-driven ratings, model portfolios for 13 exchanges, exclusive market indicators, automated technical analysis, portfolio tracking and trade alerts, daily written insights, and more. So let's have a look at some of this. So the indices, as you can see, they have 13 exchanges on there: Binance US, Bittrex, Coinbase, Crypto.com, FTX, FTX US, KuCoin, Kraken, Gemini, Gate.io, PancakeSwap, Uniswap. So out of all those 13s, you could pick any of them. We've selected the FTX exchange, and as you can see, let's have a look here. FTX 39.48%. That's the return, and we've not gone for the low caps, and we've picked a weekly. So it rebalances weekly, and as you can see, these are the tokens in there. You've got OKB, you've got the Sandbox, DYDX, which we spoke about previously. You've got Uniswap, fantastic token. You've got Tether, stablecoin. You've got DAI as well, stablecoin. And as you can see, that's the makeup of the model index. And as you can see, it tells you when it bought it. So it bought it on the 11th, which is Monday. It tells you what was purchased, the current price, initial price, and portfolio weights, initial cash value, current cash value, and amount of tokens they hold. Additional information also you can get here: daily return performance, table of statistics, and you also have here the current index holding and the previous index holding. As you can see, previous index holding only had 5 on there, and you have a lot more here. What's that? 1, 2, 3, 4, 5, 6, 7, 8 in this current holdings, and it shows you also all the details here: when it rebalanced, what it sold, how much it sold it for, and so forth. So that's something that's good for research purposes. Another thing is the token metrics grade, as we keep using. Today, the top one, it's Magic Internet Money, and it's 90.29%. So it has a market cap of 196 million with a 24-hour volume of 5 million, which is quite good. So they've done, what's that, 521 tokens that have been rated. And if you look at it on here, you could go down. I generally tend to look just at the ones top 80% and above. And I look through, pick a few, and I do extra research on them. So that's all the details there. And that's some of the things you get. Additionally, you also get the research section on token metrics. As you can see, they have deep dives. Yeah, the deep dive there, market analysis, hidden gems, code reviews, reports, and you can go and have a look at them. So this is the deep dive. So Ethereum competition and L2 scaling. You've got cyber brokers, NFT. You've got Affinity Finance investment report. Yeah, so you can see, it's a whole load of different reports and so forth, and you can get up-to-date information and also work some analysis. You also get emailed hidden gems. So this is sent out weekly, and it shows you what they've found. So here they've scanned a whole load of projects, and these two, they found Orderly Network, and they send you the details. The details are quite good because it tells you about why they like it, all the documentation, websites, investors, the team. At the time of sending this, it didn't have a token. And the second one as well here, why they like it. Again, investors, things about the team. And also, at the time of sending it, it didn't have a token. But as you can see, you get a lot of information. They also send you a weekly NFT cheat sheet, as you can see here. And on this particular one, they scored 30 NFT projects. And of that, they found one minted project that they liked and one pre-mint project that they liked. And they send you the details. You can have a look here, the website, Twitter, OpenSea. This is for the minted one, details about it. The scorecard, the team, utility, social media metrics, trading metrics. And for the pre-mint one as well, you get all the information they have about the pre-mint, also including details of how it's going to be minted, social media metrics, and a whole load of information. Additional to that, you also get sent the Token Metrics Navigator. And as you can see, this is a market update. And here, looking at the dollar index, which is the DYX, which is extremely important for traders within the crypto market to know that. It goes through the pivot and the price and everything, then gives you a rundown with regards to Ethereum. It tells you the resistance levels and the support levels. As you can see, this is from a while back. Does the same thing as well here with Bitcoin. Shows you a nice chart, technical analysis, gives you resistance levels, support levels, and usually they have some form of other information. So this particular one, they had a July to October roadmap for Bitcoin and Ethereum, and they gave you possibilities and so forth. And so you get all that information. If you like it, I do have a referral link underneath. Just click on that and you will get a lifetime discount. It is a partnership I do with them. So just click on the referral link in order to get your discount and in order so that they'll know that I sent you. And at the moment as well, as you can see, they do have a free trial, a limited time offer. So you will be able to benefit from that free trial and you'll be able to get a discount using the referral link, whether you go for the basic, the advanced, the premium, or the VIP package. And let's have a look at this piece of Twitter from Ryan. So Ryan Adams. So he basically writes, notice DeFi loans are the only ones insolvent CeFi companies are paying back right now. The code is forcing them to pay back their loans, not laws, not attorneys, not courts, code. It's almost like DeFi works better, which is true because a lot of them have, people like Celsius and Voyager Digital. Previously, I think BlockFi did that for a while. But you have a lot of these centralized digital token lending platforms. They've all gone out and, well, the majority of them have gone out and they've frozen all their customers' deposits, saying you can't withdraw. And when it comes to their creditors, they're not paying their creditors back. But the one creditors, as we showed you earlier on, the creditors that they are paying back are the code. So, for example, this DAI loan on the MakerDAO, that got paid back because if they didn't, the code didn't care, it would have just liquidated it. So, as you can see, this loan here on Aave, it's 21 million. That has to be paid back. If it doesn't, and it hits the liquidation limit, it will be liquidated and the $215 million worth of assets will be taken away. The code does not negotiate. The code just knows it's dealing with a wallet. It gets the details. Is it working? Is it not? Are you above the threshold or are you below the threshold? If you are below, you get liquidated. If you're above, you won't. There's no negotiations, no nothing. And the CeFi, centralized finance in crypto, they know that. So that's why they made sure that they paid back their the decentralized code-based loans first before anybody, because also they did have a lot of money on those platforms, a lot of money in terms of collateral, which they knew if they didn't, then they would lose. So that is a very important point. So this basically means that DeFi has won and CeFi has lost. And if you like this, please hit the like button, and also please do subscribe and subscribe to my Twitter also. My Twitter account is at Kenneth Omoya. It's my handle, at Kenneth Omoya. I usually tweet things that I think are relevant for the industry. And please do also subscribe down on here on the YouTube channel. Well, thank you for listening, and you have a good day, good evening, or a good night. Take care.